Good morning. It's Jeffrey Cohen, Chicago Quantum. How are you today? It's Monday, May 23rd. Markets will be opening in about 45 minutes. I've come to share with you a lot of research we did over the weekend. I'm also going to give you a little update on the business. And we're going to talk about stocks. We're going to talk about potentially very, very valuable stocks. We have done some fundamental research, came up with some very simple ways to think about stocks that may provide you a good profit in the business, right, out there. So that's what we're going to talk about today. We're going to talk about the markets. We're going to talk about specific stocks we think have good value. 2 or 3 stocks that seem to be running, although they're actually running down, not up. And the fact that the market looks green today. The market looks like it's going to go up, and let's talk about that and whether it's just a pre-market head fake. We'll see if there's anything in the market that gives us a sense of where we're going today. So, I'm going to start off just by going through the website. We spent a lot of time on Sunday and we updated it. And I want to give you a sense of what types of information that you can get from our website. So, first thing you see is you see different categories: investment information, research, contacts, quant analysis, project services, US listed stocks of foreign firms. So, let's start with those foreign firms. So, what happens is there are companies that are able to be listed in the United States, but they're foreign companies. And the Securities and Exchange Commission does not require the same level of diligence, reporting. So I think you have less protection as an investor. And I think that's not necessarily so good for you. So we took a look and we got the list. So Intrinio is our market data services provider. And you've got companies in here from Canada, like Stantec, UK, Paysafe, Bermuda, Brookfield Renewable Partners, by the way, has a ton of debt. UBS, you've all heard of the bank, Switzerland. You've got Netherlands. These are all companies that are listed in the United States. They look like U.S. firms. You don't know. Luxembourg, got a bunch of Luxembourg in here. More Cayman Islands. You've got Singapore, you got Brazil, you got Israel, you got Belgium. So, I don't know about you, but when I think about investing in U.S. stocks, I think about U.S. firms. And so, I just want to give you that sense that you have to watch out. So, we're going to remove these from our run starting this week. We'll have a flag. If you want foreign firms, right, we get them for you. But most people, I don't think they wanted to be buying a Peruvian stock or a Canadian gold miner when they decided to invest in U.S. businesses. So that's number one. We'll always appreciate that you watch and that you're interested. So now, daily price variance. So this was interesting. So I live and die by the riskiness of the stock market. So it's one thing to put your money in the market and it goes up a little, it goes down a little. It's one thing if we're in a stock market correction right now, right? Indices are down. If I were to show you how far down indices are, you'd be disappointed. If you looked at your 401k over the weekend, you know that I'm not lying to you. Markets are down. And these indices are the most efficient indices. These are the least risky. These are the best bets. And so if you're in passive index funds, hopefully you're doing okay. So over the past year, the S&P 500 is down 5%. Now it's actually down like 20% or 19% from the high. So if you looked at the high, that's fine. But if you look over the whole year, it's down 5%. Now that does not incorporate a 1.32% dividend, so it's really down 3.6%. IWM is down 19.25 before dividends, so figure it's 18.75, and the QQQ is down 11.79, figure 10.79. So these indices are lower. They're just lower, and we look at variance. So one of the things we do is when we run our models, we calculate a CQ&S power, and call me if you're interested in that one. That's the relative level of confidence and intensity of risk versus return in the model. A score of 292, which is under 3.0, which used to be our default setting, but now we do it automatically. A 3.0 says there's not a lot of return, so focus, Jeffrey, on risk. When it's less than 3, that means we're scraping the barrel for return. There's no return. By the way, our precision of our model, because we updated it, it's 100% precise on the up run today, which is kind of crazy. Expected return of all profitable and cash flow positive stocks based on their variance, something called a Sharpe ratio, risk return, all that, is under 5%. And the variance is for an equally weighted portfolio of all 2,205 stocks. So imagine you held a portfolio, 2,205th in each of these 2,205 stocks. The variance of that portfolio over the year every day is 1.37 times 10 to the negative 4. Now, if you follow our show and you follow our model, you have a feeling for what that means. But let's talk about what that means. What it means is good positive net income stocks had a variance of 1.40, then 1.44 earlier this week, and at the weekend was down to 1.37. So what that means is variance is down for individual stocks. People aren't trading. They're not gambling on individual stocks. We're not pushing, right? We're moving the index. That's probably with options and futures and all that. Leveraged bets, leveraged ETFs. Call me or chat me in the... You can actually chat me in the comments section. I can tell you what all that means. I'll put it on Twitter. I'll put it on the website. It'd be great. So just number one, variance is lower on individual stocks. Okay, I mean the market's crashing, but it means maybe people aren't investing so much, or they're not trading as much. The second, negative net income stocks. These are the crazy stocks. 4.2 times 10 to the negative 4. You notice that's like triple. So if you take an unprofitable stock, it is triple the variance of a profitable stock. So why not just invest in profitable stocks with positive cash flow? They make money. It's great, right? Well, the problem, it's not that simple. In a recession, profitable companies become unprofitable. Their variance triples. People get nervous. They sell the stock. It's not making a profit. So this one jumped up to 4.28 or 4.3, and now it's back down to 4.20. So even the riskiest stocks are less volatile. This is where it gets interesting. The S&P 500 ETF had a 1.2 drop to 1.19 when all the individual stocks were getting risky. The indices were less risky, slightly. Now the indices are more risky, 1.25. So, net, individual stocks are less risky come Monday morning, but your indices are where the action is. That's where the risk is. And so for those who trade, SPOO, go have fun today because there's more volatility. Probably your options and futures cost a little more. So that was interesting. I didn't know that, right? And so what else was good? We updated all of our models. So negative beta stocks. Again, this is a little technical, but so what people say is, oh, I'm going to buy this stock because it doesn't move with the market. So when the market goes down and it's crashing, I'm safe, right? Now that's not the way to think about negative beta stocks. Because most negative beta stocks are only negative like 0.1. This is 1/100%. This one's 1/3. That's an anomaly. This is like 0.2, but the rest are 0.1. So what that means is when the market is going down, these guys have a little flutter up. Not a lot. But when the market goes up, these guys have a little flutter down. So these guys move opposite. So normally markets go up, negative beta stocks go down. That's what it is. Or they're memed and they're just crazy. But some of these are new. Like Nicholas Financial's new to the list. Northern Technologies International. So these guys have been moving opposite to the market. Could be inside baseball there. We look at BKEP, Blue Knight Energy Partners, is negative beta 0.11, but it's negative net income. So, okay. How can an energy company not make money today? That's crazy. Oil is like $110 a barrel. You should be making money. Now, if you want real negative beta, if you want to hedge the risk of your portfolio, you can do it with certain ETFs. Now, these are synthetic investments. By the way, there's another one called TNA if you want to bet with the market. So, SQQQ is an ultra short against NASDAQ. Negative beta of almost 4. So if the market drops 1%, this one goes up 4. Hey, made a lot of money. But if the market goes up 1%, it goes down 4. Hey, lost a lot of money. And these are bets, UVIXI and VIXI, on the VIX. So the VIX is the fear gauge or the cost of buying downward insurance. So if you're scared of a market crash, you can buy these and they protect you. Because as a market's about to crash, people want to buy that insurance. They want to protect their investors or their own money. It's not a really good hedge against just market going up and down. You're better off using the SQQQ. But this is volatility. This is riskiness. This is a sense of malaise in the market. And so there you have it. There's your negative beta information. That's cool. Top dividend stocks. We put those out. Leptokurtic, platykurtic. You got to know a lot about math. High and low beta stocks. These are stocks that move a lot or they move a little. So a beta of greater than 2.5, Silvergate Capital, this thing flies like a rocket and it crashes like an asteroid. It's a 3.36 beta. Market goes up 3%, this guy goes up 10%. Market goes down 3%, it goes down 10%. SI Time, Coin, TTD, which is Trade Desk, LC, Lending Club, Apps, Digital Turbine, View. These are high beta stocks. These are very risky. But if the market's going up today, if it's green, there's probably no better place to be in the market. By the way, a lot of these stocks make our efficient portfolio because they tend to be low-cost beta or low-cost expected return in the market. Now, a low beta, less than 0.2, these are stocks that don't move. These are regional bank holding companies. These are REITs, holding companies. By the way, a gold miner. It's not moving much. By the way, that was negative beta like 2 weeks ago. So Newmont Corp, Newmont Mining, largest gold miner, best gold miner in the industry, moving with the market. Look at that. PNM, New Mexico's public utility. Lockheed Martin, right? Because defense contractors don't move with the market. I threw in some ETFs here just to kind of calibrate the model. So silver and gold is a 0.15 positive beta. I want to say something about this. So I don't know if you like gold and silver. Now personally, I would love to have 3% of my money in gold and silver. But what I'm learning is that gold, now this is Barrick Gold, so it's a gold miner, but same thing. Let's stick with gold. Let's stick with silver then. Silver moves 15% with the market. So normally when I see silver futures going up, because there are applications of silver in industry, that moves with the market, but it doesn't move much. No, the gold is negative like 0.07. That's fine. That's AAAU, is physical gold ETF run by Goldman Sachs. Clorox, Ball Corp, Kimberly-Clark. And then you got a whole bunch of, again, these regional bank corps. So these are low beta stocks. It's fine. I like it. So now you know. And then we do the same thing for negative net income. So Party City is moving right now. But Party City's got a bankruptcy risk, so I don't know that you want to jump in that. That's more of an anomaly. I've got positive and negative skew stocks. I have stocks that have fallen in price. Price and volume spikes that have moved, and stocks that have split. So if you have an investment hypothesis that says, Jeffrey, I want stocks that have fallen in price. All right. These have fallen in price. So FSRD, Fast Radius, has a positive net income. It's fallen over 90% this year. You know, if you're a believer of reversion to the mean, all things being equal, that's nice. Grow Generation, I love this company. But it is down 76.69% this year. And this is over the average selling price of last year, not against the high. So that's awful. So now I'm going to show you some work we did, and I'm going to give you some specific stocks that might be super duper cheap for you based on valuation. So this is me sharing the good news. Sharing valuation data. Sharing our hard work, and you don't have to pay for it. You know, some people might pay $100, $250 an hour for us to do this type of work for them. Or $7,500 to actually build a model for them per week. But I'm going to give you this for nothing. Jeffrey, what are you giving me? What is this? What's the colors mean? And I don't understand. So when you see green, green is good. Okay? Green means they made a profit and they had positive cash flow. Red means did not make a profit. That's not so good. So these are your runners. These are your money losers. There aren't many. This is high volume Friday and high variance. So Friday they went crazy and they have high variance. These are runners. Okay, there aren't that many. I'm so fascinated. Friday must have been a weird day in the market. So you got Lightwave Logic, LWLG. Lightwave Logic, I'm going to pop it up for you. Lightwave Logic is one of those stocks that has been top of our model. It is a very risky stock. It just flies like a birdie all the time. Lightwave Logic just has big moves. People make money on this. Right? They make 5 cents a share. They love it, right? Or they make 5%. They love it even more. Biotech. I want to stay away from the biotech, but Portage Biotech, TG Therapeutics has also been moving. Okay, Zymeworks, ZYME. So Zymeworks is also fairly volatile, has a slight rise in, actually traded 2 times last year's average volume on Friday. It's got a pretty high variance. See that? It's crashing. And all of a sudden, people want to trade it. So they must have loaded the boat here. So the way to read the chart. On April 29th, they loaded the boat. Maybe they sold it. 31 days later, they can buy it back. It's moving now. It's moving. But it's a down dog stock, right? It's down from over $30. So that's interesting. That one's probably going to jump. Probably going to jump. So then we look at Genius Sports Limited, GENI. By the way, this filter only yielded 3 stocks outside of biotech. This is so interesting. Same thing. Stock was up $20. Had a big sell-off in November. Had a small loading day in April. A little bit of load right there. It looks like beginning of May 12th, although it looks like it fell. So this stock is being pounded lower, Genius Sports Limited. But for some reason on Friday, volume was up. So what I would say on this one is, this is probably short selling. Okay, so I've got maybe runners that go up, maybe runners that go down. There's none other, so there's 3 stocks right here. I should throw them in a little note for you so you can see it. Three stocks that moved fast and had high volume on Friday. So let's take a look. So one of them was Genius Sports, but this one looks like it's down. There weren't many. ZYME, Zymeworks, also looks down, but loaded recently. And then I know the other one, LWLG. This one is just, it moves every day. My guess is it's a trader's paradise. All right, so that's interesting. That's not something I would have intuited from all the data. So now let's look at the up stocks. Now this one, I got to walk you through the data because it's fascinating. So we look at the last day's close versus the average. So these are the worst performing stocks in the stock market. To be in this chart, up stocks, to be in this chart, you have to have $100 million in equity market cap or above. You have to have traded every day for a year. You have to have positive beta, positive net income, positive cash flow from operations. You have to have stock prices that pass validation. There's lots of things in there, right? And so once you make that list, then you see Coinbase. So then you see your last, it's sorted by close price versus the average. So this is like a simple moving average over 253 days. You'll see simple moving average used in the markets. This smooths things out for us. We really like it. So the first stock we see is Coinbase. This stock is down 71%. It trades 3 times cash and 5 times net income. And what we do is we don't just look at market cap. We look at market cap plus long-term debt. So it's very, and this is actually the, I believe this is the book value of long-term debt, or the principal value, not the holding value, but I can't be sure. So think of this as market value of debt plus market value of equity divided by what they earn. And right now, Coinbase is the #1 valued company. Tupperware. It trades at 3 times cash and 5 times earnings. Wow. Tupperware. 10 times cash, 7 times earning. I don't know why Tupperware has fallen like it has, but wow. Now, if you look, most stocks either have good earnings multiples or they have good cash multiples, but not both. So there's a problem here, right? And I can imagine my client, my ex-client, right, saying, Jeff, it's one thing to just spend a whole bunch of money, have a lot of depreciation, and generate cash and say you're profitable, but it's not. Because they can't return the capital that they invested. They can't replenish, right? So it's great for 3 years. Just an example. I went out and I bought 500 cars and I rented them. Well, the cash is pouring in. I paid cash for the cars, right? But I have to depreciate the cars because in 3 years, no one's going to want to drive a 3-year-old car. I got to buy all new cars. So here's a good example. Net income, it's trading at 78 times net income, 6 times cash. On the other hand, 9 times net income, 11 times cash. 83 times net income, 9 times cash. So I want one that does both, right? Retractable Technologies, RVP. Now this one is not trading like a value stock. So my guess is there's an issue with the data because that's a name I've never even heard of. But that's worth some due diligence, right? Retractable Technologies. We keep going. Cons. By the way, not cons like criminals. Cons is a furniture store. Who knew? I never heard of Cons in my life. It must be regional. Okay. Big 5 sporting goods. They're doing some right. They have no debt. Trading at a great multiple. PLC, Children's Place. So remember, I don't know, if you watch our show, you know that we have been big lots. Oh, love it. Big lots, right? That should do well when there's problems in the economy. And on, right? LEU, Centrus Energy. I don't know what Centrus Energy does. It's not one we would track. It's 10 times cash, 3 times income. I wonder if that's it's not a master limited partnership, but it seems to trade that way. RKT, Rocket Companies. If this is the one I think it is, which is Rocket Mortgage, the reason it's trading at such a discount is because mortgages are doing bad now. These are earnings from the last year. So if I'm driving in the rearview mirror, Rocket Corp looks great. Rocket Companies. I love it. There's so many mortgages last year. Interest rates were so low. But come next year, Rocket and the other mortgage companies are going to really suffer because mortgage rates have gone up. Almost no refinancing. Who refinances at a higher rate? Done. Urban Outfitters. Really at a good discount. But who's going to go buy a $35 shirt when they can't get a job, right? PVH. Another retailer for clothing. PVH Corp. So what's interesting is I don't know that I'm giving you any silver bullets here. WGO, Winnebago Industries. First off, I love it. RVs, right? Great. Go camping. The problem is, who's going to buy a camper when they can't get a job, right? It's hard. So these are businesses that looking in the rearview mirror, and there's more. GoPro, Best Buy, Nature's Sunshine, Cash, Meta Financial Group, Guild Holdings, Foot Locker. God, I love that store. Do you know I haven't bought a pair of shoes in Foot Locker since I was probably a kid? Signet Jewelers. LTD means it's foreign, by the way. It's a foreign company, so it's not going to show up in our list later on. And on and on. Aaron's Company, Dick's, Janus. For some reason, Janus has had problems in the money management field. You don't see a lot of money managers hitting this. There's one other. I actually went down and I looked because I knew it was a value stock. But you see how much down I have to go because it's only down 5% a year. It's actually a great company and I love it. My guess is Flex Steel is also going to show up in this. There it is. CLF, Cleveland Cliffs. I love the stock. I should buy the company. I love the stock. But it's not really at a discount. It's only down 5% for the year. But that's still fine. Let's look at Flex Steel. Not found. So maybe it doesn't make a profit. Flex Steel. It's funny when you know of a company, right? Yeah, Flex Steel didn't make the list. I'm so sorry. They probably don't make. That's probably why they're down. So there's a whole bunch of companies right here that you could research. So here's what I did. I typed a lot of these in, and I looked at pre-market. So first off, pre-market futures are up. So market's green. Market looks good today. It's going to open higher, about 1%. That's great. So, counting in my head. Nine to 4. So 9 of these stocks that we had put in a model, 9 of these stocks are up pre-market. 4 are down. So the ones that we track online, 9 up, pre-market, 4 down. So one thing is true, even in a down market. Cash flow from operations and net income matter. They are valued by investors. In a recession, however, earnings and cash flow evaporate and you end up holding stocks with worse valuations. And this is why they say not to buy stocks in a recession, because you're going to suffer for a while. Now, to be honest, right, do you really think that like some good company is not going to do well in a recession? No, they're going to tighten their belt. They're going to make the good choices, good management team. So that's interesting, right? It is. So I haven't really walked you through the pre-market, so I'm going to do that now. So 2 minutes, pre-market, where are we? Start with crypto. I like crypto. I don't own it. I don't trade it. But that's okay. So if we look, Bitcoin's up 1%. Great. By the way, the euro at 106.57, this is very important. So Jeff, why do I give 2 thoughts to the euro? So euro US dollar exchange rate matters. It's the number 1 exchange rate, right? With Europe, it's big. So when you see 106, basically 1.0656, this rate was as low. This is a very high rate. This means the dollar is falling. It's really weird. I saw this rate at 103.9 not that long ago, maybe a week ago. This is high. So dollar weakness is usually good for the stock market. What are my futures? Dow's up 1%, S&P's up 1%, NASDAQ's up 0.6%, Russell's up 1.1%. We are having a fun day today. If it's going to open higher, the Nikkei was up 1%, Europe's up, the VIX is down, so fear is down. I just don't understand this. Our gasoline's at 382. We should all be crying because we all got to fill our tank with gas. Heating oil is up. Natural gas is almost $8. That's high. Even though it's down a little bit, it's really high. Crude at 110 and change is high. Very interesting that the bonds are resuming their upward climb in yields. The bonds are falling. So if you have money in bonds, you're losing money. The yields are going up. If you buy a bond tomorrow or today, you're paying less. You're getting more yield. You see the dollar? I told you, it's crashing. It's down. 102.36. Now, I'm not going to call the dollar crashing. I'm going to call the dollar slightly moderating. But if the dollar were to hit 98 and 96 as an index value, yeah, we're in trouble there. So, because what that says is the stock market's going to go through the roof. Woo! And I'm actually thinking we're in a market correction. So that would kind of ruin my thoughts on the market. Let's take a look. So net, market's going to do great today. There's another place I like to look. These are your major world indices, right? So where did we go? So France is up. UK's up a lot. Germany's up. UK and Europe are also up. Now Hang Seng, so Asia's down. Jakarta finally fell. I love the Jakarta market. So I feel sad that Jakarta's down, right? India was down slightly. China was flat. So Asia, not great. Europe is higher. Let's look at commodities. Brent crude, so European crude, 113.70. That's high. That's high. It's high. It's high. Food is up. Coke is up. Coffee's up. Copper's up a little. Corn's up. Cattle's down. That's helpful. Gold's up a little. Lumber's up a little, actually. Not much. OJ's up. Silver's up a little. Soybeans are up. So food's up. So asset prices are up. People want to make bets today. We look at the Russell 2000 over 5 days. The Russell 2000, right? It had a great Friday. But then it fell through the day and it's been up again. So the Russell, people are back investing in the Russell today. We look at 5 days. That's what I'm doing here. Wednesday was high, fell into Thursday. Friday it fell into a crevasse. Now we're looking good on Monday. The NASDAQ. S&P 500, the bellwether, did great on Wednesday. Fell into Thursday, fell Friday. It's been recovering all weekend. It's up now. So I look at this and I think there's money going to work this morning. People are going to work. They put their shirts on, they got their wallet out, and they're buying stocks, and they're buying indices, and they're going crazy, right? And I see it in the stocks that I follow. How about bonds, Jeffrey? Where are we with bonds? You know me, I love the bond market. So 30 years under 3% again. So long yields came down. That's good for the stock market. Short yields coming back up. That's not great. That just means you get more money in your savings account. But it means fast money is actually a little more expensive. And if we look at how the bond market did on Friday, advancers beat decliners 2-1. It's almost exactly 2-1. Investment grade is a little more than 2-1. High yield debt was 1-1. So I had a saying that I had before. Fear of missing out is a cost-effective strategy. Stocks and bonds that are down will tend to stay down during this market. This is our hypothesis, but it seems to be true. And so it pays to wait before catching a falling knife. In this market right now, don't catch the falling knife. Okay? Convertibles that have an equity kick, decliners were actually ahead of advancers on convertibles. So the thing that really gets me, though, is you have 59 new highs, you have 748 new lows. So stocks that have fallen are continuing to fall. Let's look at FinViz. They've got this number. I actually tweeted it. I'm going to go, not tooting my own horn here, but I want to show you a tweet I sent on this weekend, I think. I think it was this weekend. I made a poem, but that you don't care about poems. That's stupid. So where's my new high? Here it is. There were 41 new highs on Friday. There were 1,018 new lows. So here's the thing. That's like a 25-to-1 ratio. If you're going to invest and you want to invest in a downtrodden stock, just wait. They're going lower. 1,018 stocks went lower. 41 went higher. It was great. Oh, yeah, going up. Nothing's going up in this market. And so what I would say is this. I love you guys. Thanks for watching. Thanks for listening. I shared with you some very specific stocks. So in summary, I said, there's 3 stocks that move fast that lose money. Jenny is down. Zyme is down but loaded recently. And LWLG, it's a trader's paradise. It's trading on fumes, right? Your up stocks, these are defined as 100 million in equity or more. They trade every day for a year. They have positive beta. They have positive net income, positive cash flow from operations, and they pass our extensive data validation. These stocks are doing great. They're down. These are down in price, but good earnings. And here, I'll be even more specific. They have a better than 10-to-1 ratio on total capitalization over cash flow from operation and total capitalization versus net income. This is hard to find because it's both. Both conditions are met. This is Coinbase, Tupperware, Retractable Tech. There's a furniture store called Cons, not con artists. Big 5 Sporting Goods. The Children's Place. Big Lots, Centrus Energy, the Rocket Companies, Urban Outfitters, PVH Corp, Winnebago, GoPro. Nature's, oh, this is Best Buy. Nature's Summer Harvest or something like that. Cash is a financing company. GHLD, I forgot. Foot Locker. Signet Jewelers, but it's foreign, so we're going to take that out of our list. Aaron's. Dick's Sporting Goods. By the way, what's going on with sporting goods? Why are all the sporting goods and apparel down? By the way, sports apparel's down too. Sporting goods and sporting apparel's down. By the way, Under Armour's down last week. Oh, and Cleveland Cliffs. And GHG is Janus Henderson. They're a money manager out of the UK. So they probably also will fall off the list, but it's not bad. We've been sending them letters trying to sell them services because we like them. So that's where your market's at. Let's see. Let's test. Where are we at with the futures? Futures are still green. Up 1%, 2/3%, 1.125%. Again, the Nikkei was up, Euro's up, the VIX is down, crude's flat, yields are rising, dollar's falling. So I think market's going to do fine today. So have fun in the market. I'm going to look off screen and see how our efficient holdings are doing today. Pre-market. This is the stuff we absolutely run for our clients, and I apologize I'm not going to share it with you, but I'll tell you if they're up or not. So I always look at the current efficient portfolio stocks, and I know that they're not random. They're not. They are actually money manager type picks, right? So when I look pre-market, 3 are up, 3 are down. That's so interesting. So our current efficient portfolio stocks, 3 up, 3 down. If I look at a slightly larger portfolio, which had the same edge, 4 up, 4 down. So that is super interesting because that says the underlying stocks that normally fly with the market, they're not flying pre-market. That is so interesting. If I look at stock picker stocks, remember the ones I showed you, the up stocks? The ones that lost money? Let's take a look at those. Stocks that lost money but have good valuations. All right, I'll count it out loud. Up, up, down, up, flat, down, 5, 3, 7, 8, 5. 8 to 5 ratio. So, pre-market just got worse. It's 8 up versus 5 down. So, guys, I don't know if the market's going up this morning that much because our things that we track, current efficient stock portfolios, normally your hedgies and your money managers are jumping into those because it's easy money. So easy. Takes a lot of horsepower. Takes a server to calculate them, but it's hard. So I would say maybe this is just indice based. Maybe these are just leveraged bets on the indices. And so good luck today in the market. Please be careful. And by the way, markets are open. Have fun today. Bye-bye.